Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Jordan, we're going to talk about the precious metals and we're going to look at more of the shorter term charts. So some of the daily charts I have in front of me. First and foremost, starting with gold and GDX. Pretty consistently, we have seen ever since that August high, record high for gold, we've seen lower highs and kind of a mixed bag of lows. But fact of the matter is, after that recent breakdown about 2 weeks ago, it does look like gold and even GDX are setting up for a continued drift lower. When we look at, let's say, the gold daily chart, what are some key levels, I would say, besides that 1850 level where gold just stopped at the tail end of summer? What are some key levels for investors to watch?
I would say on the upside, 1920, which was the resistance when gold was consolidating after its initial correction in early August. Then it went sideways for over a month, and it broke below 1920, had that big move down to 1850, and this recent bounce, it's weak strength. It's bearish. I mean, it's a counter trend move within the context of a larger correction. So, and in the last couple days, well, not today, but the 2 days prior, even the 3 days prior, gold was testing, I believe, 1915, 1920-ish, that area. And so in the last 24 hours or so, it's fading. It's moving lower. It's trading at 1889 right now. So, I mean, this is just classic technical action. It broke support, but it kind of rallied back to do a retest, to do a back test of that resistance. And now it's rolling over again. So, I mean, the next area is 1850, and then below that, 1820. So this is just in a short-term sense, just these are classic bearish technicals.
Jordan, what about some of the moving averages that you're following? The ones on my screen, especially some of the shorter term ones like the 50-day, even the 50 exponential moving average. They're starting to move sideways, even starting to roll over and trend a bit lower. Some of the longer term moving averages, those are still moving higher, but those are also down at much lower prices. What are you watching in terms of moving averages?
Just the 200-day at this point. I mean, the 50-day gold is well below that. I think in recent days, gold rallied up to the 20-day, and so it's rolled over. Um, but the 200-day, Corey, that is rising sharply, but I mean, it's at 1741 right now. So give it another, I'm just looking at it, trying to eyeball and see, this could hit, I mean, it in another month or two, this should come up into the higher 1700s, which, based on the 15% correction that gold has had at other points, which we talked about in a past interview, I think that takes gold down into the high 1700s. So that's basically what I'm looking at, high 1700s, or maybe it's the very low 1800s. One of those levels, we're going to see a sustained bounce for a little while. But the 200-day, Corey, I think, and this goes for actually most of the sector, I would say, I think it's more likely than not that at some point we're going to test the 200-day. Maybe it's not going to happen on this first leg down. Maybe it'll happen on, the retest that I'm predicting later in the year. Because I'm getting to the stocks now. If you look at the analog and the things we talked about in the last interview, for all these examples, there's always been a retest. Doesn't mean there's going to be a double bottom or that 90% of the low or the rebound will go and the low will be retested. But in some form or another, there will be somewhat of a retest. And if that happens later in the year, Corey, the 200-day moving average will be much higher, regardless of what you're looking at, whether it's gold, GDX, individual stocks, most individual stocks. So I do think keep an eye on the 200-day because that is a level that I think it's more likely than not probably going to be tested. The question is it going to happen on this initial decline or later in the year at a higher level? So yeah, keep an eye on that for sure.
Okay, well, that 200-day moving average, at least for something like GDX, that's only another about 12 to 13% lower. For gold, that's the whole way down in the 1700s. So hopefully we get a little bit of time for that to catch up. Let's also talk about silver, because I'm looking at the silver daily chart, and unfortunately, that looks worse than gold in my eyes. We've seen lower lows, we've seen a similar breakdown, but the fact of the matter is, just looking at this general silver chart, it does look broadly weaker to me. What's your assessment of silver on the shorter term charts?
I have the same assessment. It's weaker than gold. The recent rebound is bearish. It's weak strength. And looking at silver, there is some support, I think, in the mid 22s. But if that goes, then you could see silver come down to below 21, I would say. And the 200-day for silver is at 1943. It is rising, so we'll probably see that get to be above 20 in November. But as we know, Corey, silver is a lot more volatile. So I wouldn't be surprised if we saw silver, if it plunges below 2250 or so, then there's a risk that it could test the 200-day moving average sooner rather than later. And even though I will mention this point, even though these corrections in the larger picture, they tend to be consolidations because they chop around. You have a move down, then you have a big rebound, and then a move back down to do the retest. I mean, if we test the 200-day moving average in the next couple weeks or this month, I think in terms of the price damage, that will be the low as far as price. But so it's like I said last week, I mean, if we come down, and I'll just add in, if we do test the 200 days, that's likely to be the low in price for this correction in the sector. However, that doesn't mean we're just going to rebound and run all the way back to new highs. It will be a grind back from there.
Yeah, you know what? It seems like there are a lot of markets that are going to be grinding, for the most part, sideways here for at least another month, maybe through the rest of this year. But Jordan, this correction, it's coming in the face of a lot of the gold bug comments that are always bullish, but a lot of these gold bugs are saying, it's still a great environment for precious metals. Fair enough. I can see a lot of their arguments when it comes to easy money policies, but fact of the matter is charts are telling us a little bit of a different story, at least for the short term. What do you think in terms of catalysts could be the next thing that could help support higher precious metals prices?
2 words: lower prices. I mean, the larger picture is bullish, and we just have to let these corrections and consolidations play out. And look, to be a successful investor, you really make very few decisions. A couple of months ago, we were saying now's not the time to buy. There will be a time later. I mean, I think there's probably a good chance that before the end of this month, we're going to get a legitimate buy opportunity for investors. And I mean, I think that's what people should worry about. Look at the charts, look at the technicals, know the possibilities, and prepare in advance for that buying opportunity. And if you think about that and you think about the companies that you want to invest in, I would focus on those things rather than trying to guess what's going to be the next catalyst for the sector. I mean, the sector is way above the long-term moving averages. The primary trend is higher. It's going to continue. We're going to see much higher prices 12, 18 months from now. All the larger fundamental driving forces are in play. Don't worry about what's going to happen fundamentally over the next month or two. Nothing is going to come out of the blue that's suddenly going to drive precious metals that much higher. I just don't see it, and I wouldn't waste time trying to predict. I mean, is it going to be this, or there's a stimulus, now there's no stimulus, or there's election, maybe this person will win, maybe they'll do this when they get elected. I mean, it's all noise. I would just try and look past that, focus on the technicals, look at the support in the sector, and when the market comes down, gets really close to that, things get oversold again, probably in the next couple weeks, that's the time you want to be a buyer. And in addition to focusing on those things, focus on your companies and the companies that you want to buy. These are the things that are going to help you make prudent decisions, get great entry points. It's not going to be trying to predict what catalyst is going to come out of left field.
Okay, Jordan, we're going to leave it at that because I think that is one of the best assessments that you can have right there in terms of what investors at least should be focused on here when looking at the precious metals. Jordan, always thank you for your time. I'm going to post a link to your website below. Have a great rest of your week.